you just took a loss. It happens. It's part of trading. You know this intellectually. You've accepted it 100 times before. But something happens after that loss that has nothing to do with logic. A compulsion activates, an urgency, a need to get the money back, not eventually, not over the next week, right now, this session, before the market closes. If that feeling is familiar, this video is going to name exactly what's happening, and more importantly, why it always costs more than the original loss. The pattern is called the reset illusion, and it's one of the most destructive psychological cycles in trading, not because it's rare, but because it feels completely rational while it's happening. Here's the illusion at the core of it. After a loss, your brain reframes the situation as a deficit that needs to be corrected, not as a normal trading outcome, as a problem that requires an immediate solution. And the solution your brain proposes is simple. Take another trade, get the money back, reset to zero, then you can think clearly again. The illusion is that getting back to zero will feel like resolution, that once you've recovered the loss, the psychological pressure will lift and you can trade normally again. It never works that way. Here's what actually happens when the reset illusion activates. The trade you take to recover the loss is almost never the same quality as your planned trades. It's taken under emotional pressure. The setup may be marginal. The position size is often larger than normal because you need to recover the full loss in one trade, not half of it. The stop loss gets placed wider because a tighter stop means more risk of being wrong again, and you can't afford to be wrong again right now. Every one of those adjustments increases the risk of the recovery trade beyond the risk of the original planned trade. So the trade designed to fix the problem has a higher probability of making the problem worse. And when that recovery trade loses, the reset illusion intensifies. Now you need to recover 2 losses. The urgency doubles, the position size increases again, the decision-making deteriorates further. This is how traders turn a single planned loss into a blown session. Not through one catastrophic decision, through a cascade of increasingly desperate recovery attempts. Let me show you exactly how this cascade looks in a real trading session. A trader enters a planned trade, valid setup, correct position size, stop placed correctly. The trade hits the stop, clean loss, within the expected parameters of the strategy. Intellectually, nothing has gone wrong. The strategy has a win rate. Losses are part of that win rate. This was a planned loss. But emotionally, something has shifted. The loss feels personal. It feels like a mistake that needs to be corrected. The reset illusion activates. They take a second trade immediately, not because a new setup has formed, because they need to get the money back. The setup is marginal. The size is slightly larger. The stop is slightly wider. That trade loses too. Now they're down double. The pressure intensifies. A third trade, larger size, wider stop, even more marginal setup. By the end of the session, what started as a single planned loss within normal parameters has become the worst day of the month. Not because the strategy failed, because the reset illusion ran the session instead of the plan. Now here's the part that makes the reset illusion so difficult to break. Sometimes the recovery trade works. Sometimes you get the money back, and when that happens, the brain records it as confirmation that the reset illusion is a valid strategy. It isn't. A recovery trade that works is random reinforcement. It has nothing to do with whether the reset illusion is a sound approach. It just means the market moved in your favor while you were making a poor decision. Random reinforcement is actually more dangerous than consistent failure because it keeps you coming back to a pattern that destroys you 7 times out of 10 because the 3 times it worked felt so good. So what do traders who've broken the reset illusion actually do differently? First, they redefine what a loss means before the session starts. Not during, before. A planned loss is not a deficit. It is not a problem. It is the cost of doing business in a probabilistic environment. It is expected. It is acceptable. It changes nothing about the next trade. This sounds simple. It is not simple. It requires genuinely internalizing that your strategy's edge plays out over hundreds of trades, not over one session. One loss does not tell you anything meaningful about whether your strategy works. Second, they implement what some traders call a loss pause. After a planned stop is hit, mandatory pause before the next trade. Minimum 5 minutes. Some traders use 10, some use 20. The pause has one purpose: to break the emotional momentum of the reset illusion before it can activate fully. 5 minutes of not trading is enough to interrupt the cascade before it starts. Third, they implement a daily loss limit that is separate from their daily target. If losses reach a specific dollar amount, session over. No recovery trades, no exceptions. The session is closed. This rule feels harsh until you calculate what revenge trading has cost you over the past year. Most traders who do that calculation immediately understand why the rule exists. Here's the deeper truth about the reset illusion. The compulsion to recover a loss immediately is not about the money. It's about identity. A loss feels like a statement about who you are as a trader, and the recovery trade is an attempt to correct that statement. But your identity as a trader is not built in one session. It's built over hundreds of trades. Weeks of consistent execution, a strategy applied correctly over time. One loss says nothing about that identity. The reset illusion tricks you into defending your identity with your capital, and that is always a losing trade. This video is for educational purposes only. Nothing here constitutes financial advice. Trading involves substantial risk and is not suitable for everyone. The question I want you to sit with after this video: what has revenge trading actually cost you? Not in one session, but across your entire trading history. Most traders who answer that question honestly never look at a recovery trade the same way again. Drop your answer in the comments. And if you haven't seen the first 2 videos on the escape route bias and the house money trap, watch those next. These 3 patterns form a complete picture of why execution fails, even when strategy is sound.